Hello everybody, welcome to another update on the stock screener. Today I wanted to talk about silver miners. And you probably know there are not a lot of primary silver miners out there. For example, Hecla, Kerr Mining, Great Panther Silver, Fortuna Silver, those are not silver miners, okay? They are 80% gold miners. So here is a list of silver miners that actually are primary silver miners. And they produce around 30 to 50% silver. So I consider these real silver miners. So what you can see here, I have put a market cap in $1 million and their production numbers and their costs. And based on these numbers, I calculated the EBITDA, which is the production, times the current silver price minus the cost. And then I just divided market cap to EBITDA. So here you can see which silver miner is the most overvalued, which is First Majestic. And the most undervalued is Sierra Metals. So which of these miners would you buy? Of course, you would buy the cheapest one, which is Sierra Metals. And you would avoid the most expensive one, which is First Majestic Silver. So let's go over the numbers. Let's start with First Majestic. So they are really high in market cap, 3 billion. Their production is, it's one of the highest production, but they also have high costs at 20 AISC. So this is the problem for me. This is a low margin producer and you need a high silver price for this to move higher. And it's completely overvalued at 34 times EBITDA. And here's the EBITDA. So this is a no-go for me. Then we have GATO's silver. This is an upcoming silver producer. It was listed a year ago. And it has a nice production level of 7 million ounces. AISC is average, but still very overvalued. Okay, so I wouldn't buy this one. Then you have the flagship Pan American Silver, which everybody loves. And the reason why it is loved is because the AISC is negative. This is important. So this company will never go bankrupt because it can operate at any silver price. The problem I have is that it's still overvalued at 11 times EBITDA. So this is also not an option for me. Too overvalued. Then we go to the Chinese company, Silvercorp Metals. And you can see the market cap is now going down. So this is a smaller company, has an average of 6 million ounces of silver production. AISC is at the low end, so that's good. EBITDA, market cap to EBITDA is 10. Still overvalued to me, but it's getting better. So this is buyable, but not for me. Then we have the top 3 that I have. This is my top 3. Endeavour Silver, a very good company. Market cap of 750 million. Has actually good production, and this is also including the Terronera, which is going to go online in 2 years from now. So I added this to the production. And the AIC is going to be average 15. So market cap to EBITDA of 7, which is buyable. Okay. But we have better companies here. We have Avino Silver, which has a market cap of 100 right now, 3 million production, AIC of 17. This is a very cheap company. Market cap of to EBITDA of 5, which is fair value according to me. But if silver goes up, this can really shoot higher. So this is very viable to me, and they have a lot of resources, even more than Endeavour Silver. This is actually around 300 million in silver resources, and Endeavour Silver only has 200 million. So look at the difference in market cap. This is amazing. One is at 100 million and the other is at 750 million. Of course, the production is completely different. But when you look at the resource base, Avino has much more resources. But then comes this one. And this silver miner has been underperforming, but I still like it. And why do I like it? It's trading at almost the same market cap as Avino, but it has 14 million production, the same as Endeavour Silver. But the market cap is less than half of Endeavour Silver. Can you see that? And AIC is almost the same. Okay, so this is a bit higher than Endeavour Silver. But even so, there's a huge difference in market cap here. So I think this has a lot of upside potential. EBITDA is half of this. So if you take half of 750, you would come to 300 to 400. So there's a double potential in Sierra Metals. And market cap to EBITDA is only 3. So this is the cheapest one of all the silver miners. And I'm not making these numbers up. Look at this. This is the third quarter results, the second quarter results. And here you can see the AISC was 18.5, which is what I have here. And copper production or silver equivalent production was 4. If you do this times 4, you have around 15 to 16 million production, and I just took 14. So if you put 15 here, then it becomes even cheaper. Less than 3 times EBITDA. And these were recent results from June 2021. Okay, so their third quarter was not that good, but they can improve their operations back to the second quarter results, and then you would get this situation. So that's the overview. And I think you will agree with me that this is the best buy right now. And I'll see you in the next video.